We made 300% shorting BNB within a 24-hour period. Yes, risk reward 300%, and the position is still open, but the profits are locked in using a trailing stop loss. So today we're going to cover the details. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in to BNB, which is also day number 23 on the BNB Follow Me series. All right, let's dive in. All right, so I did a video on the 8th of June for my private Telegram community. So if you purchased one of my courses, or my Elliott Waves and Fibonacci course, you would have got this video in the Telegram group. It was on the 8th of June, and what we said here was a BNB, so Binance Coin day trade. 4 hour means a 4 hour is the higher degree time frame, 1 hour is the lower degree time frame, ABC correction, and looking for a shorting opportunity. And the real basics that we covered in the video was the following. What we saw, because you always want to trade on two time frames, higher degree and lower degree. Higher degree here was 4 hour. And what we saw was a really clear move to the downside and what looked like to be forming an ABC style correction. And if we get a move above the wave A high and some type of price over here, there's going to be a good potential shorting opportunity where we can make some great profits. And this is how we made 300% risk reward and the position still open. So we're going to cover the detail today so you can see this, because these principles, Elliott Waves and Fibonacci, which is one of the best ways of reading the markets, apply on a macro, like you can look at years worth of data, days worth of data, and even minutes, hours and minutes that you can go into. So let's now go into BNB. I've taken the date back to the 8th of June. So when I recorded this video for the private community that would have got this trade set up. And again, let's just quickly do the basics. We said the market's been quite impulsive to the downside. And it looks like we are forming some type of A, B, C style correction. This is what we're looking at over here, if I just make it a bit clearer. And if we see price go above this wave A high, let me just get rid of this now so you can just see that. If we see price go above this wave A high, like so, we want to be on high alert that we may get a continuation of the former trend. What's the former trend? Well, this is the former trend, which means this low is likely to get exceeded to the downside. So this is what you call shorting opportunities, a short setup where it's a day trade. So we're looking at the 4 hour chart and the hourly chart where we're making money as the market moves down. Let's just do some Fibonacci time as well. We did a couple of things over here. You can see there's these lines. The basics are we did a retracement. Let's just do this retracement over here. This high to this low. The 62 to 78.6 are really relevant. And then we're just also going to do the alternate price projection. So these are the typical ratios that you'll typically find a wave C go to. Right, if a wave C unfolds, we got this price zone over here, and we got this price zone up here as well. So what we simply do is we literally just set a price alert for this over here, right? So we want to be on high alert if a wave C forms like so. So now let's just unfold the data. I'm just going to squeeze it in like so and do this. Let's just unfold the data and see how it unfolds. This is an hourly chart, so every bar represents 1 hour. We just want to see if that wave A gets exceeded. And as of there, we'll see on the 10th of June, so 2 days later, after the setup, after we saw the setup, now we can see that it did not form a typical wave C. It was really extended over here. But we've had this high over here exceeded. So now this looks very corrective here to here. So we should now anticipate a continuation to the downside, right? This is our thesis, is a continuation. That's what we're thinking. So now what we want to do is look for a logical shorting opportunity where we can enter the market. So there's a couple of trade strategies you can use over here. I'm going to tell you the two. I'm going to tell you the one that I used and I tend to favor. It depends on the market conditions. We can literally just go, right, we'll go short on the market on the wave below. And then put our stop loss up here on this wave C high. But that's quite a big stop. That's quite a big stop. That's nearly $20 stop loss. It'll still represent 3%. So what I like to do in these cases is, because it's quite a big stop, I will wait for the price to go below this wave B. This will be a strong indicator that this wave C top is going to hold. So we'll just be patient for this, and then we'll wait for the first pullback. First pullback against the market, and then we'll look for a nice shorting opportunity. So let's just clean up this chart. We don't need these lines anymore. We don't need this no more. And we'll just do it like so. So now we're going to do this. We're just going to zoom in like so. And we're just waiting to see if the price goes below this line. Bang, it goes below. And now what we're going to do, we're going to pull up the momentum on the lower degree time frame. We can see it's bearish, but what we want to see is the next bearish reversal we're going to be patient for. So what that means is, on the indicator, this will be all part of your trade plan. We're probably going to see a move to the downside, upside, and then on the next bearish reversal, if it coincides with some type of pullback, we can look for a shorting opportunity. So now let's just unfold the data. Let's just wait for the price. Let's just see. All right, now we've got this pullback. You see this? This is called a correction, right? This is called a correction on a micro degree. Move, impulse down, correction. So now we can get a tighter stop loss. So now let's use the information that we have, which is this momentum indicator. Let's wait for the blue line to cross the red. Bang, it's crossed the red over here. So now what we can do is we can have a logical, high probability trade setup where we can go short on the market, which is making money on the way down. So where do we want our entry? Well, we want something called follow through. We want an extra, we don't want to just try and buy here, even though it might be a bit more profitable if it works out. It's less probable. So what we're going to do is say, all right, what should happen if the market is going to continue to the downside? Right, well, it should exceed this low over here. So I'm going to make that as our entry. Make it green. Where should our stop loss be? Well, we can do some Fibonacci ratios as well, but now that we've got the bearish reversal, our stop loss should be no higher than this swing high over here. Yeah, and I'm going to do two lines because I always enter two units. We got our insurance unit and our profit unit, right? And I'll talk about that in a second. So now let's just see how the market unfolds. Let's just unfold some data. Let's see if we get triggered. Okay, the market moves a bit higher, so we need to now adjust our stop loss. It's gone bullish on the momentum, so we'll just need to wait. Oh, there we go. So we now got that bearish reversal again. So we now need to adjust our stop losses. So our stop losses will be here. Now keep in mind, this is a day trade. This is on an hourly chart. So you may find you put in your order and you can't be in front of the computer. That's okay. But if you're in front of the computer, this is what you'll be doing. And if you're on a daily chart, the same principles apply on a weekly and a daily chart is what I'm trying to get across here. So now let's just see what happened. Boom. Trade gets triggered, right? So now how you want to think about this is let's just say you got 10,000 in your trading account. We're going to risk 3%. Yours could be lower, it could be higher. 3% to find out if we're right. That's $300. So if you had a $100,000 account, you'll risk 3% to find out if you're right. So the risk is always 3%. Yours might be 2%, might be 1%, but 3% should be the maximum. 2% is quite common. So let's just use the example because I want to reference some numbers. A lot of people struggle with the numbers. Is 3% is representing $300. So you'll see what I mean by when I said 300%. It's basically risk reward. So now what we're going to do is we're just going to give the trade some space, because what we want is a business plan that says, all right, we've been entered into this trade. It's unfolded as anticipated. Again, this was the private video that I did for my private Telegram on the 8th of June. And you can see, obviously, the wave C took a bit longer to unfold, but it's pretty much textbook stuff over here, ABC. What are we anticipating as a minimum? Well, where I'm anticipating that this low is going to get exceeded. This wave B low is going to get exceeded. Why? Because that's normally what happens after a correction. After an A, B, C style correction, you'll normally get a continuation. So I want to be patient and allow the market to unfold. And what's the minimum expectation that I would have for this? Well, it will be 100% of this move. So I'm going to measure this move here. I'm going to measure it, and I'm going to project it down from over here. This is going to allow us to manage our position with no emotion or very little emotion, because the whole name of the game is to identify the edge and trade that edge without hesitation or reservation, but at the same time not to be reckless. So the minimum expectation is actually down here, right? We can also do, another external retracement, which is also quite common, just so we're aware of the typical numbers that we should anticipate the market to go down to, and it's this range over here. So the main thing is we don't need to really do anything now. We're in the trade, let it unfold. And when there's logical points to move our stop loss to break even, which is risk-free, and then trail our stop loss to lock in profits, that's what we're going to do. So now, let's just give the market a bit of room and let it unfold. We'll keep the momentum here as well, so we can keep a track of what's happening on the lower degree momentum, which is the hourly time frame. All right, so the market's unfolded. Okay, we move down, which is nice. We don't need to do anything yet, though. A lot of people, a lot of amateurs will be getting overexcited right now. We're going to be patient, and then we're going to allow the market to tell us. Let's just wait for a pattern to unfold or an obvious swing high. Okay, so what we've got now, let's just look at this like so. What we've got now is a pattern unfolding. First and foremost, we see that this low has been exceeded, right? So it's been a nice move to the downside. But we've got something over here that's quite special. Is a new swing high. And we can now move our stop loss on our insurance position to this swing high. Over here. And we'll move our profit-taking position to break even. Why are we doing that? Well, this one is to assume that we're wrong and we can take in some early profits. And then this one is to really ride the larger degree trend. And now let's just let it unfold. Let it unfold. Boom. Nice move to the downside. Now, do you see any pattern unfolding with this? So let me now just zoom in like so, because we're covering a lot over here, but we're covering in some of the detail. But this is the reality of trading. Do you see any particular type of pattern on this part of the market in terms of Elliott Waves? By the way, if you are not familiar with Elliott Waves, I've got a Elliott Wave Masterclass, which shows you the key fundamentals and the key rules that you need to know to read the markets and the market psychology, because the price, the patterns represent psychology, and that's what we're looking at. So what we're about to talk about is Elliott Wave patterns. So if you haven't done the basics, take the free Elliott Wave Masterclass, is in the description link below, and it'll really upskill you to a level where you can see some of the key fundamental ratios that we're just about to use right now in this BNB trade management. So, and by the way, from the entry point, the date was 9 a.m. on the 11th of June. And now we're 9 a.m. So it's around 24 hours. Not even 24 hours yet. 24 hours. And we've made some significant profits to the downside over here. But we're not done yet. But what pattern do you see? Do you see it? Do you see any 5-wave pattern to the downside when we're looking at this? If we looked at this as a 1, a 2, looks like a 3, looks like a 4, and looks like a 5. All right, we need to be aware of that, because now that is unfolding in a textbook fashion. We didn't know this information at the beginning, but now we can see this. Look, 1, 2, looks like a nice 3, looks like a nice 4, and it looks like a wave 5 is forming. All right, so now what we can do is we can now project some end of wave 5 targets, which is going to help us manage our position. The trend is your friend. Ride it until its end, until it reaches its bend. Well, what typically happens after a 5-wave sequence? Well, it's normally a 3-wave ABC correction. So do we want to give all that profit back to the market? No, we want to trail our stop loss tight to the market. So now let's just do a end of wave 5 price projection. I'm just going to get the key ratios. The key ratios are 62, 38.2, and 100%. Just want to make sure I get the exact height. Bang. And we can also do some external retracements for if this is the case. So now, all of a sudden, we are in this wave 4 zone, wave 5 zone. We want to be highly aware of this. I'm going to do something And when I'm doing this, I normally don't post these kind of trade setups on YouTube public, mainly because it's a day trade and sometimes it gets triggered and the setup's gone. But this over here, what we're going to do now is we're using 2 degrees of the time frame. We've got 4 hours, which is the higher degree. We've got a 1 hour, which is lower degree, which is what we're looking at. And sometimes when you're getting your stop losses and you're really wanting to maximize every ounce of profit, if you're in front of the computer for a day trade, we can actually drop down to a lower degree again, a third lower degree. In this case, it will be a 15-minute chart. And the reason we'll do that is there any clear swing highs and swing lows that we can see to trail our stop loss? Well, yeah, we can trail it at this one. There's another one over here. And then if we look at the next bearish reversal on this price, and this is what happened, now we've got another swing high over here. So we can really trail our stop losses. But if we also just keep it on the hourly chart, you'll see it's pretty clear to see also. So it's only if it's not clear to see. So what do we have now? What do we have now? We have a 5-wave movement to the downside. We've had 2 bearish reversals. So there's one for the entry, and we've had the next one over here. So what is a logical thing to do with our second stop loss? Well, we don't need to have it any further than this low over here. But as we are unfolding into a nice, clean, textbook 5-wave sequence to the downside, right, we want to use this profit position and also lock it in down here as well. So we're going to just now manage the position on every swing high. So either you could do this on a 15-minute chart if you're in front of the computer, or just do it on the hourly chart. It's basically saying on every bearish reversal, we go on a swing high, or you can also go on, if you're in front of the computer, this is do it on a hourly chart on a 1-bar high, because now we're getting towards this extreme of this wave 5 zone. So now let's just take the data to live, like to literally where it is right now today, because this position is still open. I don't think it's been stopped out yet. Literally, this is where it is right now. As of this morning, as of this recording, it's been less than just coming up to 24 hours. So this is how we made 300% on BNB. The position is still open. The entry was here, and the stop loss is over here. But the market hasn't stopped us out yet. And we don't know how far it's going to go on the downside. All we know is the probability is that we are in this wave. This is the typical maximum wave 5. And we're in this zone over here already. So we want to be aware of that. And now we are trailing our stop losses really, really close to the market. So now let's just do the math. Let's just do the math. Because if you had a $10,000 account, you'd have made $1,000. You'll be literally on $1,000 locked in profit. Not just paper profits. We're locked in because we've adjusted the trailing stop loss. It's one of the hardest things to do is take profits. People find it incredibly difficult. Incredibly difficult. So what I'm going to do here is I'm just going to measure these points over here. This was our risk, the red part, which represents 3%. And where current stop loss is on this high over here. And we can see is a 3.09 risk reward. And that's literally the running locked in profits. Now, if we take it to what the price is right now, it'll be more, but that's not what's relevant. What's relevant is what's the locked in profits with a stop loss. And using futures contracts, you can have a trading stop loss as you're making money on the way down. So now, let's just do the math. If the risk reward is 3.09, let's just multiply our initial risk, 3% of 10 grand is 300, times that by 3.09 is what we've locked in. That's $927. Yeah, and if we divide that by the initial account size times 100, that's 9.3% or 9.27% in a 24-hour trade, right? And these patterns unfold time and time again. Now, what we did today is a day trade, right? So, if you're a day trader and you're managed to be in front of the computer and you can be there 1, 2, 3 times a day, but you can set alerts. So what TradingView allows you to do, if you right-click on it, you can add an alert, and you can add price alerts. So you can add an alert for, this high over here, or, if you get stopped out, or, we can add an alert down here. So for instance, if the market goes down like this, we want to adjust our stop loss to this swing high. All right, so what we can do is take the price low over here, this bar, the low is 251.1. So we'll literally go to 251.1, right click, add an alert, and just say adjust stop loss to swing high. So you don't actually need to be in front of the computer. You can create this. You'll then get an email from TradingView saying that low has been exceeded, and you can then adjust your stop losses. So you're just trailing the stop loss, and then we can't wait to get stopped out. Why? Because we're locking in profits. So if it does this, we've locked in all this green area, which is 300% risk reward. But this is now a guaranteed profitable trade. Hopefully that makes sense. So if you want to learn how to read the markets like this 5-wave sequence, that gives you an edge, a massive edge. These corrections, this ABC correction, which was the reason why we entered the trade, this ABC correction, which is the most common style of correction, is an ABC zigzag. Take my free Elliott Wave and Fibonacci masterclass, and it teaches you the fives, the Fibonacci ratios, end of wave 5 projections, the ABC corrections for wave 2s, and just ABCs in general, the key ratios that you really, really want to be aware of so you can read the markets like a pro. And if you end up buying one of my courses, you'll get an invite to my private Telegram. We do weekend workshops. And when I see high probability day trades like this, sometimes I post them. And this was on the 8th of June on a 4-hour and 1-hour. And it just gives lots of opportunities, but there's tons of these opportunities. And what I'm trying to do with you is to teach you how to fish, right? Rather than give a man a fish, teach him how to fish, feed him for a lifetime. If you give him a fish, he'll feed him for a day. You know the cue. All right, so like, subscribe, hit the bell notification, take the masterclass, enjoy it. Let's finish on a quote today. Let's go over here. Let me just move this over here. All right, I'm going to go with chapter 8 today. Let's go chapter 8. There we go. Henry Ford. It has been my observation that most people get ahead during the time that others waste. So it's all about learning, drilling, purposeful practice, literally momentum, double momentum. Today we use the 4-hour and the 1-hour, and we've been following BNB for 23 days straight now. This is the 4th trade setup, and it's gone nicely. It's been one of the most profitable ones to date, and that's 3%. That's really, really significant in terms of, 300% in terms of risk reward, which is like 9, nearly 10% of your entire account size. And when you compound that with the previous profits, that's really, really significant. So we're just looking to be very, very consistent. And your job as a trader is not to actually make profit. It's just to be consistent. Identify the high probability setup and then trade them without hesitation or reservation, but not to be reckless. 3% risk. We know we can be wrong. We know the market can do anything. Even though when it's high probability, that's why we're being patient for the ideal high probable setups, and then ride those trends and ride those trends and ride those trends. So it's been my observation, Henry Ford said, that most people get ahead during the time that others waste. This training doesn't come for free, so to speak, in terms of you got to put in the work, do the masterclass, kind of rep it out, and you'll get better and better and better over time. And you can trade on weekly and daily and 4-hour, 4-hour and 1-hour. You can even do 1 hour and a 15-minute chart. But again, it depends on your personality, your risk tolerance, and your time available. And all of them have different pros and cons. All right, so I will see you tomorrow for day number 24. So we made 300% risk reward, BNB, shorting the market, making money as the market goes down. So you now know you can make money as a bull market and in a bear market is what we did here. So we'll see how this unfolds. We're just going to keep trailing the stop loss, keep trailing it. Let's see how it unfolds. It could go down further. It could get stopped out in the next few hours. We don't know. We're okay not knowing. That's why we use a trailing stop loss to lock in profits as the trend unfolds. But because it's a 5-wave sequence, we go, okay, it looks like it's coming towards an end of a trend. I didn't cover it today, but the 4-hour momentum is now also oversold, which is the higher degree time frame. So that's also another signal which makes us want to tighten the stop loss to really squeeze out maximum profit, but not to take it out of price level. It's just to let the market take us out, because we could just get another massive downward bar and we'll literally just keep trailing it bar by bar. If I'm in front of the computer, I'll do it bar by bar, or I'll just do it on swing highs and keep setting trade alerts. So I know the email function can help me as my executive assistant. All right, I'll see you tomorrow for day number 24. Follow me on BNB, 300% today. Let's be patient for this setup to unfold and finish, and then, or this trade, should I say, and then we'll look for future potential setups also. All right, see you soon. Have a good day.